Hello everyone and welcome to Option Alpha. In this video tutorial, going to talk about ascending triangles as far as chart patterns are concerned. So let's take a look at the chart pattern as always. It's a pretty easy pattern. Like a lot of patterns, they're very easy to see. This is actually one that forms on a lot of charts, and so we're actually going to look at the ascending or bullish chart pattern here, but you can easily flip this pattern and get a descending triangle pattern as well. So the main thing to remember about the ascending triangles when you're looking at a chart is, again, that you already have to have an established trend. So this can't form at the bottom of a market. It can't form at the top of a market and be a topping pattern. It's a continuation pattern that usually should form within a trend. And the basic premise behind this pattern is that you have this overarching trend, a strong move in this underlying security, and then it kind of takes a breather for a couple weeks and it moves sideways and consolidates again before breaking out to the high side. So with this pattern, what you want to see is you want to see a flat top. So you want to see at least two highs, and you can see here on our drawing we already have the two highs. And you want to see a rising trend line or rising support with at least two lows. So that's the real key, is at least two highs and at least two lows. Again, the reason they call it an ascending triangle is because the bottom line here is ascending upwards, and that really indicates the bullish momentum and building of this breakout that's going to happen. The key to remember with this pattern is that the breakout has to occur before the stock continues through the pattern. So a lot of times what I see when I'm coaching students is I see them draw this ascending triangle, and the stock will actually just trade all the way to the end of the pattern, and then it seemingly will break out of the pattern, but really what's happened is that the stock ran out of room on the chart. And so what you want to see with these ascending triangles is you want to see at least two lows, two highs, and then a strong move right after that. Not much more complicated than that. You don't want to see this thing dragging out long into the pattern. So as always, let's take a look at some of the numbers with the ascending triangles. It has a really good average rise or decline afterwards. Again, it's a continuation pattern, so it's going to be within an already established trend. But the average rise or decline is about 29% after the breakout. Very, very strong. The breakout failure rate is actually pretty low at 11%, not as low as some of the other ones that we've talked about on these video tutorials, but 11% is pretty good, so it's got a 90% almost success rate as far as the breakout. The throwback rate is actually fairly high at 47%, so about half of the time you're actually going to see the market break out and then come back down and retrace that breakout and just retest that breakout level. Now again, going back to the chart, this is actually a good thing if you're going to be a trader, because if you see this breakout, you can actually wait for the market to come back down and retest this level high here. That was resistance, but it's now going to be acting as support. So that's going to be really good. You can catch it on the throwback or pullback. Some keys to remember with the ascending triangle. First, the price target is found by measuring the widest distance of the pattern triangle. So again, if we go back to the chart here, the widest distance would be the distance between the beginning of the ascending triangle. So that is usually the length of the breakout. That's how much energy is left in the stock to rise higher. Number two, at least two recent highs are required to form the top horizontal line, and the highs do not have to be exact, but they should be very close. Again, with this triangle, it's an ascending triangle, so the top horizontal line or resistance level should be fairly level or flat. And again, like I told you guys earlier in the video, two recent highs and two recent lows as far as the ascending support line. Again, the breakout does not occur if the stock runs out of room in the pattern. This is a huge, huge point to consider, and actually should have been number one on my key points here. But if the stock runs out of room in the pattern, that does not constitute a breakout. The breakout needs to occur before the stock runs out of room at the end of the pattern. But this is a really good pattern to use on continuation trends. Really good pattern to get your footing with some option trades if you start to see some consolidation. It's a really good time to enter some iron condors or credit spreads around the market. Hey, thanks for watching this video from Option Alpha. As always, we invite you guys to come back and check us out at optionalpha.com. And if you like this video, please share the video with any of your friends, family, or colleagues on your favorite social network.